Hey, it's Clay at claytrader.com, and we are going to talk about the problem with keeping day trading too simple. Don't get me wrong, I am all for keeping things as simple as they can be kept. I don't think you need to overcomplicate it. I'm all for the KISS method. Keep it simple, stupid. With that being said, there is a line that can be crossed where now it's just too simple. And the problem with keeping things too simple is when you don't have a full understanding, you're going to cut yourself short. You're going to leave yourself high and dry in other situations, and ultimately, you're just not going to find the type of success that you want because you're operating under too simple of a framework. Again, I'm not saying it's got to be vastly complicated, but it can also be too simple and you can just leave money on the table, which is what this person is at threat of based on the comment here and the video that I will show you here. But basically, I posted a video, and in that video, I was down $2,000 at one point, and then when the trade was over, I had made $1,800. So what this person is doing, and I understand it when you're a beginner and just getting started. And now I don't know if you should laugh at people when you're a beginner and just getting started because there is always the threat that maybe you don't know as much as you think you know. So, but I guess that's probably like a separate life lesson video. If you're a beginner in something, don't be laughing when you're accusing people of things because again, maybe you're missing something, which is the case here. But they are keeping it too simple. They are saying, wait a second, risk versus reward. I know what I'm talking about, Clay. Risk versus reward. You were at $2,000 down. You had $2,000 drawdown, but then you only walked away making $1,800. That's really bad risk versus reward. That you're being a bad trader. I'm going to laugh at you about it because that's bad risk versus reward. Now, usually if it's just one comment, it's like whatever. But in this situation, two people are like, yeah, haha, exactly. And it's like, okay, I think this is worthy of a video because there is at least three people out there that don't actually understand something and have made risk and reward too simplistic. So risk management is important. I'm glad this person actually understands this because it's shown they're in the right direction, but they're also keeping it too simple. So what do I mean by all this? Well, let me bring up this trade and I want to go through it. Again, their complaint is that I only walked away with $1,800, yet I was down $2,000. But here is one moment in the trade that I want you to keep an eye on. I am actually up 2,200. So at that point in time, I could have sold. This person could have sold so that in their mind, they're saying, well, good. I was down 2,000 at one point, but I still walked away with 2,200. So my risk versus reward, that made sense. I walked away with more reward than I was ever at the bottom part of the trade. And that is true. And I could have done that. But this is where I'm saying you're making things too simplistic because at the end of the day, and maybe you know where I'm headed with all this, well, that's true. I could have walked away with more reward than I had on the downside when I was down 2,000. Like I said, that was staring me right in the face at this moment in time. I could have done that. But you also want to give trades the opportunity to work because had this thing kept on moving, that number down here would have kept doing what? Well, you're saying, well, it could have kept moving in the upwards direction. Exactly. That's giving a trade the opportunity to work for you. But if you're just driven by, okay, I was down 2,000. So as soon as it goes above 2,000, I just need to get out because I need to keep my risk versus reward like looking good, quote unquote. Okay, too simplistic. I'm glad you're focused on that stuff, but you're keeping it too simplistic because you want to give yourself the opportunity. So let's just see how this plays out. So again, at this point, yes, it was possible for me to, not get laughed at because I made less. Now you know what I'm going to make. I'm ultimately only going to only make $1,800 on this. But I wanted to give myself a chance for this thing to continue to move. So we'll see how the trade plays out here. So like I said, I want to see if it can break up higher. So right there, I took some off the table, took some more off the table there. And then now I want to give this thing a chance. So right here, I am putting in a stop loss, meaning, you know what? If it comes down here and hits that red line, I'm out and it is what it is. But what? But if it wants to keep moving, guess what? I don't know how big this number here can get. So I've put $1,300 in my pocket now at this point in time. But this number right here, I don't know how big it can get. And that's a great spot to be in as a trader where you can say, hey, I'm making money. I'm making bare minimum $1,300. But I actually don't know how much more than $1,300 I'm going to make because I don't know how much more this final contract right there might actually move in value. So that's what I'm risking. I'm risking the chance where, my risk versus reward looks bad because I may only have $1,800 compared to 2,000. So that's what I'm risking. But what am I getting on the potential upside? Well, if this thing turns around and, like I said, just starts ripping and roaring to the upside, well, that number is just going to keep getting bigger and bigger. And then before you know it, maybe my overall number is at 2,500. Then maybe it's at 3,000. You don't know, but that's the exciting part when you get to the spot because you don't know how far the market may take this. So that is the case, and we'll play it some more. So again, it's just a matter of let's see if this thing wants to keep breaking out, or is it going to come down and stop me out? So like I said, look at it, bouncing around. Maybe this thing's getting ready to explode. Trying to give it a chance. Just watching, seeing if it wants to push upwards, push upwards, push upwards. And right there, it took me out. So yes, $1,800. Now here's my question. Let's say that I had just taken out, all three when it was at the $2,200. And then let's say the price just boomed up here. What do you think Ted, the person that commented, what do you think Ted would be saying and laughing at me about? If you're saying, well, he'd probably be like, hey, you moron, why were you so aggressive with your profit taking? Why didn't you let something work for you? Why did you sell everything? Why didn't you at least hang on to one contract and then let it work for you and follow it up with a stop loss, right? It would have been some variation of that. So that's the secondary learning lesson here is always keep in mind hindsight confirmation bias. It's easy to be an armchair quarterback, right? When you already know what happens. But the core goal here is you got to keep in mind, you can't have big trades if you're cutting yourself short. And you're going to cut yourself quickly short if you're saying, well, I was down 2,000. So, okay, I'm looking at 2,200. Okay, let me just get out right now at 2,200. That way I can say that the profit I made was more than my, the biggest drawdown. So you got to give yourself a chance. And sometimes it doesn't work out. Here it did not work out. So yes, technically speaking, I was down 2,000 and I quote unquote only made 1,800. So that can make the risk versus reward look a little skewed, but within the context of the trade, you can see I had myself positioned where if that final contract would have kept grinding higher and higher, well, then I don't know how big that number would have potentially been. And it could have been way bigger than just that 2,000 or 2,200 number that you saw earlier on. So just keep that in mind as you trade. You don't want to get an understanding of something and then just make it way too simplistic because you're not going to be able to take advantage of the market as you should because you're going to have one of these where, Ted would have taken it off and then just watch the thing grind and grind and grind. And sure, he's sitting there saying, well, at least I'm not like that clay trader guy. I made 2,200 and when I was down 2,000. Well, yeah, but what happens on that one where you could be saying there, wow, if I would have just hung on to a portion, I could have been up $3,500, $5,000. And in the world of futures, which is where this is taking place, any of you that trade futures, I'm not exaggerating. Like gains can add up very, very quickly, which is why it's important, depending on the strategy, to let something work for you. So I hope this helps, but just keep in mind and always be asking yourself, especially if you're just getting started, am I keeping things too simple? Always be asking yourself that. Again, I'm not advocating that you make things vastly complicated, but am I keeping it too simple? Because this is a classic example where there's at least 3 people in the world, Ted and then the 2 people that liked it, that just don't quite understand. Again, I want to give them credit. Well done. They're focusing on risk versus reward. They're at least thinking about risk management, which is fantastic, but they're also a little bit on the too simplistic side of things. So if you found this helpful, hit that like button. As always, if there's questions, leave those down below. I do read comments. I will reply to them. But yes, definitely check it out. And then finally, if you want to learn more about the tools I'm using, how I build consistency and manage risk, then definitely get signed up for this free live webinar that I'm offering. And I will walk you through the right framework. A lot of people show up, well, as I just talked about, keeping things maybe too simple, overly complicated. Maybe they have an approach that they think makes sense, but it doesn't actually make sense. So this will not only show you, the tools, why they work, and how you should use them, but also just make sure that you have the right framework and right guardrails in place so you don't end up doing something that you think makes sense, but actually doesn't make any sense at all and is going to ultimately get you in trouble. So check out claytrader.com/live or just use the link down below in the description area, and that will tell you when the next live class is. So get signed up, and hopefully I'll see you there. And again, if you enjoyed this video, make sure to hit that like button.